Ladies and gentlemen, good day and welcome to JHS Svendgaard Laboratories Limited Q2 and H1 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand over the conference to Mr. Nikhil Nanda, Managing Director from JHS Svendgaard Laboratories Limited. Thank you, and over to you, Mr. Nikhil Nanda.
Thank you. Good afternoon, everyone. Thanks for joining this investors call today about JHS Svendgaard Laboratories Limited quarterly results quarter 2. Just to give you a quick, brief background about the company, we started as a proprietary firm in 1997 with manufacturing of toothbrushes. Initially, we were making toothbrushes for some of the export brands. Subsequently, we tied up with Gillette, which were the proprietary owners of Oral-B at that point of time. And we started growing, adding customers like Dabur, Amway, Patanjali, Colgate during the course of our expansion. We also added newer product categories like toothpaste, mouthwash, and dental accessories as part of our portfolio. At that point of time, we were looking at setting up a huge manufacturing facility of almost 300 million toothbrushes in 2004. When the total Indian market was only about 650 million. The banks were not too enthused by my idea of setting up a huge facility, which I told them is being built for the next 20 years and not for immediate requirement, because we as a country are growing and toothbrushes are still having very low penetration, so we have a huge potential to grow. So we went public in 2006 after a successful IPO. We put up a huge manufacturing facility, one of the largest in India at that point of time in 2006 at Kalam, Himachal Pradesh, which had the fiscal benefits. Subsequently, Procter & Gamble came in as one of our premium customers, and we added more product categories like hair colorings, hair straighteners, creams, lotions for them under the brand Vela. And subsequently, Tide and Ariel also came in as product categories. This has been the history. Unfortunately, one of the product categories, Procter & Gamble Oral-B toothpaste launch was not too successful, because of which the product had to be recalled from the market. And there was little acceptance of the consumer of the Oral-B toothpaste for various reasons. And this was their second launch. Earlier trial was in 1990 when the toothpaste wasn't perceived well by the consumer. Similar thing happened this time, because of which there was a business loss primarily of the Procter & Gamble businesses over the years. And subsequently, we tied up with Patanjali, which was growing at a breakneck speed at that point of time. And that also slowed down in 2018-19. And then we were hit by COVID. And subsequently, in order to grow the company, what we've done is, which is the recent development, we are getting into a merger with Vedic Cosmeceuticals Private Limited. This is a company involved in the personal care industry, specializing in R&D and development of high quality cosmetic products ranging from baby care to skin care, hair care, even pet care, spa products, grooming products, and many of them with natural ingredients, which is the call of the day. What makes the amalgamation truly compelling is that both the companies can share a lot of synergies. So there's a huge product portfolio that comes along with Vedic, while JHS brings on the table huge manufacturing facilities. So we are very excited about the possibilities that can be created with this merger. We envision that with Vedic coming on board, we'll be able to leverage our manufacturing infrastructure more efficiently, which currently is operating only at about 25-30%. And this would lead to better utilization, better asset churning, and greater sales and profitability for the company. We also have complementary customer base, so we could cross-sell the products between the customer base of Vedic to JHS and JHS to Vedic. We are also very pleased to announce that recently JHS has also registered its products in the CSD Army Canteen, which has significantly boosted our business portfolio to the extent of the bottom line, because we're selling at highly profitable margins, which is not possible in case of contract manufacturing, where you have more or less fixed margins. We also have commenced the commercialization of our talcum powder plant, which is new, and the first billing is for one of the largest talcum brands in India called Nycil, owned by Zydus Cadila. This year, the other development has been our supplies to Reliance Retail. Reliance is looking at coming big time into FMCG play, and we've started with the toothbrushes as one of the categories to begin with. And we are very excited that as the brand grows, so shall the sales and product portfolio of ours with them, now that we have a larger product portfolio with Vedic by our side. So moving forward, we are committed to building on the success and drive the growth which we've been missing for the last few years, primarily on account of limited product portfolio and limited customer base that we can tap into. With the larger product portfolio and a larger product customer base that we've going to generate with Vedic coming on board, I think sky is only going to be the limit for us in the next few years. As far as the financials are concerned, I would request our CFO Ashish to take us through the numbers. So after that, probably we could have discussions on the same, as also the business outlook.
Thank you, sir. Good afternoon, everyone. Thank you for joining. So with respect to the second quarter ending 30th September 2023, we've reported a revenue of 18.93 CR as compared to 15.9 CR in the previous quarter. So there's a growth of approximately 19% that we have achieved in the present quarter. So while, yes, as compared to the corresponding quarter, there's a decline of approximately 10%, but that decline is mainly due to the strategic change in the customer's mix that we are targeting on. And that strategy comes along with focus on better margin customers, which are being preferred, and with a short-term impact maybe on the top line. And this how it's ultimately reflecting on the numbers as well, is that our EBITDA margins in the current quarter has improved significantly as compared to the previous quarter. So we have reported an EBITDA margin of 3% in the current quarter as compared to negative EBITDA margin of 11% in the previous quarter. And this is led by largely because of the change in the customer mix, and we're focusing on the better margin products, so leading to a better gross margin and obviously cut down on the cost front as well, which is ultimately leading to this improvement in the bottom line. So as far as our PAT for the quarter two, while that stands at a loss of 73 lakhs, but overall cash positive, EBITDA margin is there. With respect to half year ended, we have reported a revenue of 34.83 crores during the first half, as against 41 crores in the corresponding half of the previous year. As I mentioned, that this decline is primarily due to the change in the customer mix, but that impact is short term, and this whole strategy is being driven towards improving the gross margins. So as far as our EBITDA for the period half year, we stood at a loss of 1.71 CR, and our PAT for the half year is being reported at a loss of 3.32 CR, as against a loss of 4.87 in the corresponding half of the previous year. So those are the major highlights with respect to the financial numbers. Now we can take up the questions.
Thank you. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manoj Rajani, who's an individual investor. Please go ahead.
Hi, sir. Thank you for the opportunity. So actually, I had just some of the balance sheet questions, mainly, regarding the trade payables. So why has it been decreased by almost around 6 crores? I mean, any particular reason for it? Since, it has kind of adversely affected the working capitalization.
Thank you, Mr. Rajani, for your question. I'll take it back. So these trade payables, as I mentioned, that we are in the first half of the current year, we have looked up to a change in the customer mix, in the product mix. So ultimately, being in the contract manufacturing space, all the vendors are being suggested by the client. So all the vendors with respect to that particular client have been cleared off, and that is what has led to change in the trade payables significantly. While the impact on the working capital cycle is temporary, since we were in the transition process, but in the subsequent period, that has been reinstated to the original terms that was being there till the last year.
Okay, sir. And so is that is that also why the decrease has been in the current liability?
Yeah. So current liabilities it was there because as far as it just around the end of the previous year, so there was this one of the advances which was received from one of the customers because of the current liabilities that has been there. But subsequently, that has been adjusted with respect to the supply.
All right, sir. And so lastly, basically the plant and equipments have increased by almost, about 4.5 crores, we can see in September. So as compared to the previous quarter. So any purchase of new assets?
So it's not exactly a purchase. These are equipment which were not put to use, so they were there in the capital work in progress. So in the current half, they have been capitalized.
Okay. All right, sir. Got it. And so any particular, this reason for the Oral-B issue that we had?
Sorry?
So Oral-B issue?
Oral-B issue you're referring to?
Yes, sir. Basically we had an issue with the Oral-B Procter & Gamble, so let's just start on that.
So as Mr. Nanda mentioned, that was reason was compelling because of the market forces which was there. But that issue is done and out, and ultimately, as far as any impact on the financial statements are considered, all those things have been squared off by 2017-18. So that is done and dusted. So that's no more impacting the business in the current scenario.
Okay. All right, sir. I'll get back into it if I have anything.
Thank you. Thank you.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and one to ask a question. The next question is from the line of Supan Parekh, who's an individual investor. Please go ahead.
Hello. Hi. Am I audible?
Yes, Mr. Parekh, you're very much audible.
Yeah. So my first question is, can you provide me some insights into the company's research and development efforts moving forward and as well as in this particular quarter as well?
I think Mohit would be the right person to answer this. Mohit, would you like to answer that?
Yes. So, like Mr. Nanda said, that Vedic is merging with JHS. Now, Vedic has been primarily focused on supplies to the B2C industry, where, as you are aware, there's a lot of quick turnaround that's needed. In the past 15 odd years, Vedic has spent a lot of time, effort in studying newer trends, in understanding the concepts that may be required by the Indian consumer as well as consumers abroad. We have initiated a lot of new technologies, initiated a lot of new products which are easily available in the Indian scenario. Now, after the merger with JHS, we are also concentrating on technologies that can be accepted, changes that can be accepted in the oral care industry. There's a lot of emphasis that Vedic lays on research and development. We try and create newer products, newer formulations, better formulations at an economical cost. And that is what we are wanting to extend to the oral care segment now after our merger with JHS.
Okay. So, what are your, how much are you planning to spend on R&D in the coming quarters or this fiscal year?
So, in terms of, are you talking in terms of the money also that's going to be put into R&D?
Yes.
Ashish, do you have an idea on the figure that we've budgeted for this?
So overall, what we have budgeted is approximately 1.5 to 2%, including the complete overall team setup and the research and development expenses that are accrued there as part of our ongoing budget.
Okay.
तुम्ही ज्या व्यक्तीशी बोलत आहात त्याने तुमच्या कॉलला होल्डवर ठेवला आहे. कृपया लाईनवरच राहा. The person you are speaking with has put your call on hold. Please stay on the line. आप जिस व्यक्ति से बात कर रहे हैं उसने आपकी कॉल को होल्ड पर रखा है. कृपया लाइन पर बने रहें. तुम्ही ज्या व्यक्तीशी बोलत आहात त्याने तुमच्या कॉलला
Sorry about that inconvenience. It was from one of the participants. We take the next question. The next question is from the line of Nihar Mehta, who's an individual investor. Please go ahead.
Hi, sir. Wanted to know, are there any new product in development, or have you, acquired any new client in our portfolio? Hello.
As I mentioned, there are two customers that we've added. One is Zydus Cadila for talcum powder, and one is Reliance Retail for toothbrushes. And we have a potential to grow that business multifold, considering the fact that now we have a much larger product portfolio with Vedic also by our side.
Correct. So, the clients of Vedic will also be in our clientele. Is my understanding correct?
That's right. And our clients, which we currently have, also sell a lot of personal care products which Vedic currently manufactures. So we would be able to offer them also the product portfolio that Vedic owns.
So as you have mentioned, can I say that the new products would be able to fetch similar margins as existing products in our business?
Sorry, can you repeat that, please?
So the new products that we have in our portfolio, would it also fetch similar margins as our existing products? How it is gonna impact our margin going forward?
Maybe we might be able to get better margins, considering the fact that the formulation and the development and the R&D done on those products is our proprietary information. So we might be able to get slightly higher margins there.
Not even any kind of estimate in some range?
Too early to give out estimates. Maybe we'll be able to let you know about 6 months down the line.
Okay.
Right now we've just begun speaking to customers.
Okay. On another thing on the merger, as I was going through your presentation, is there any capex to be, required as a part of this merger, or same manufacturing units are going to be used for our new products, which will be added?
Manufacturing units are going to be used for the products currently. As the business grows, we have strategically decided, although that's way ahead in future, we would probably like to have another setup in South so that we are able to service our customers better both from North and South. But that's still in a very nascent stage.
Understood. So, any plans of raising any funds for our business, maybe post-merger?
No, nothing yet.
Not yet. Okay. I know that you have mentioned about R&D, so could you please reiterate that, in what ways are we going to use our manufacturing unit and the R&D process of Vedic Cosmetics post-merger?
I'll answer
basically, okay. Go ahead.
Like Mr. Nanda mentioned earlier, Nihar, that there are a lot of clients for JHS which will come on Vedic, which will be given Vedic products, and Vedic clients will get oral care from JHS portfolio.
Mm-hmm.
Just to give you an example, Dabur was a big client for JHS, and after the merger has been announced, Vedic R&D has given a lot of new products to Dabur which they have recently launched.
Correct.
So there's a lot of emphasis that Vedic, in the past 15 odd years, Vedic has placed a lot of emphasis on R&D. In fact, Vedic is known in the market because of their R&D capability. And
right.
Now, these are being extended to clients which are already there with JHS and, vice versa. We also,
Understood.
To add a little bit to what Mr. Nanda said, he told you about Zydus and Reliance. I would like to proudly say that we also managed to get HUL onboarded, and we are now manufacturing a major part of their close-up range. So that's another big client for us. And they are also being offered a lot of new products which we are developing especially for these clients.
Right. In terms of financials, I mean, after amalgamation with Vedic, I think you have already said that the Vedic clients will also be a part of our line. So how are you ensuring, in terms of sales and distribution going forward in the business, given globally whatever is happening, there is a lot of uncertainty. So in terms of sales, supply chain, distribution, how are you ensuring that it should be productive and efficient going forward?
I'm sorry, I don't exactly understand what you're wanting to ask here. Because most of our the supply chain for our clients is handled at their end. We basically manufacture for them and we supply to them. There's a push from the center on Make in India, and India is probably one of the only countries in the world which is doing well in the current scenario, even though the entire world seems to be suffering. There's huge consumption domestically also, and a lot of push is coming into India because of companies wanting to move their supply chain and production bases away from China. So these are the two things that we are looking at capitalizing on.
All right, understood. Thank you so much for the insights. Thank you, sir, and wish you the very best.
Thank you.
Thank you. The next question is from the line of Nikhil Arora, who's a individual investor. Please go ahead.
Hi, sir. Thanks for the opportunity. So I just wanted to know if we are having any new strategy for expanding the product portfolio in oral care and personal care industries. If you could shed some light on that.
So, Mr. Arora, I'm going on that. So basically, as I mentioned earlier, what we are going to do is we've got a complementary list of customer base between Vedic and JHS, where we can cross-sell the products. So just to give you an example, a company like Dabur, for whom we've been making toothpaste for the last 23 years, also sells a lot of personal care products. So recently, we've started manufacturing the Gulabari range of face wash for them at Vedic. So this is how we are reaching out to our existing customers, saying now these are the other product categories that we've added from Vedic. While there are some customers at Vedic whom we are reaching out with our oral care portfolio and trying to insist that they should source the oral care also from us, considering our manufacturing capability. So we are able to cross-sell one with our existing customer base itself. I think we have a potential to double our business in next 1 to 2 years if we are able to cross-sell to all of them, which theoretically is possible. Practically may not be possible because they have existing vendor base, but we feel that's the target that we've set for ourselves. How much of it we are able to actually fructify is only a matter of time that we'll be able to identify. This is one strategy that we are doing. Secondly, what we are also trying to do is now working closely with all our customers and trying to understand if we were to set up a south-based facility. So most of these companies outsource their south sales from a south-based facility only. Some of them are sourcing from north and paying a huge transportation charge in the light of GST. Earlier it was beneficial because of the fiscal benefits. Now in the GST regime there are no fiscal benefits available. So they only want to source it as closer to the market as possible. So that's the second thing which I mentioned earlier also during the call, that we are evaluating South as a place where we can go and set up a smaller manufacturing location. So we are able to service our existing customers for their additional volume of South market from South. Okay. These are the two strategies we're going ahead with currently.
Okay. And sir, any other plans to expand our presence into international markets? Or any other regions that we are looking into or we have in mind to expand or grow as such?
So international markets, we were doing a substantial export prior to COVID, which during COVID hurt most of the markets globally. I think now, fortunately for all of us, the inquiries from the international markets have started increasing with the China plus one policy coming into play at most of the places. We feel our participation in trade shows at various international platforms would definitely help us regain some of the international market footprint also.
So we can expect a rise in our exports in the coming quarters if I can quantify.
I would say coming year, not quarter, because contract manufacturing is a long-term business.
Yeah,
and especially in the export market, domestic market, it takes 6 months for a contract to fructify. In export, it takes 1 year because of the regulatory approvals that happen.
Okay. So got it. Sir, one last question from my side, sir. The data, if we see it has increased, like from March to September, it has increased. It has come closer to roughly 101 days or 100 days. So what would be the reason for that?
I'll take up that, sure. So as I mentioned that we were in the process of transition with one of the customers as we were working on the change in the customer mix. So that is why the accounts were in the settlement process. So in the subsequent period to the reporting period, that has been taken care of, and that has been the average which was being maintained because that's the pretty much standard which has been established in the contract manufacturing space. That is there, which is in the subsequent period. So it was only a temporary phase of transition which has impacted the quarterly ending numbers.
Okay. So that is a temporary thing. Okay, sir. Thank you so much.
It's a very temporary thing. Yeah.
Okay. Thanks for the clarity and wish you all the best for the future, sir.
Thank you.
Thank you. The next question is from the line of Irshan from IK Capital. Please go ahead.
Yeah, thank you for the opportunity. My first question was in regards to Vedic. So what was the financials for Vedic in FY23 and FY22? I mean, in terms of top line and margins? Hello? Hello? Hello, am I audible?
You are audible, management.
Mohit,
Yeah, sorry.
Mohit, would you like to take that?
Sure. Do you want me to repeat the question?
Yes, please.
Yeah, so I just wanted to know the financials of Vedic for FY23 and FY22. Like, what are the top line and operating margins?
So 22 and 23 were fairly close to each other. We were at about 52, 53 CR top line. And the margins, we were working on 5% net profit in 22, and the same was about 0.5% in 23, because a lot of expansion expenses took place in the previous year.
And what would be your operating margins? It would be somewhere under 7 to 8 range?
Operating margins, you mean the gross profit?
The operating margin, EBITDA margins.
EBITDA margins, we are targeting about 6.5% in the coming year.
What were those margins in the year FY22 and 23?
In 22 was about 5.5, was about 7%. In 23, it fell down to about 2.5%. And now in the current year, we are targeting about 6.5% after the increased customer base that's coming in.
Okay, and can you help me out with the product concentration? Like, I mean, what percentage of revenue is contributed by men's grooming, hair care? Any rough contribution?
So hair care contributes about 60% of our revenue. 30% comes in from specialized skincare, and the rest 10% comes in from men's grooming, pet grooming, baby care, other products.
And any client concentration? I mean, any client which...
Sorry?
Any client concentration? Like any client which contributes more than 20% of our overall revenues?
Well, last year, 3 of our major clients were involved in a buyout by one particular group. So the Good Glam Group had bought out 3 of our main brands. So from 15% each, the Good Glam Group became about 40-45% of our turnover. But in the current year, there are other clients also that have got added up. So I think there are 3 or 4 major clients who are about 20%, and 10-15 other clients contribute to the balance.
Thank you. Thank you so much. That's it from my end. Thank you.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Supan Parekh, who's an individual investor. Please go ahead.
Hello? Hello?
Supan, you're audible. Go ahead.
Yeah. Actually, last time I guess because of some issues, I got cut it off. So my next question is, what new innovations or products are in the pipeline? Like, how do they align with the customer needs and market demands?
To answer that, Supan, what happens is that the R&D team or the new product development team at Vedic is continuously studying trends across the world and seeing how they can map it to the demands in the current customer base.
Okay.
Constant discussions happen where the business development team or the key account managers discuss with the product team at various brand levels and offer them products based on requirements that may be there.
Okay, sir. So the next question I would like to ask is, how are you mitigating the risk associated with the global supply chain disruptions, like with the war going on around? So how are you managing that? Is there any specific things that you are doing or anything which you like to tell?
Yes. So since COVID, one has been, when COVID came in, there was a sudden disruption of supplies, and Vedic took a conscious decision to start looking at raw material and ingredients which are made in India or sourced from India. So during COVID times, because we faced a lot of problems, it's a conscious decision that is now helping us during this time.
Okay, sir. And then last
We
question.
rely mostly on Indian-made ingredients, Indian-made products to contribute to our Made in India philosophy.
Okay. Okay. So the last question I'd like to ask is, like, is there any partnerships or acquisitions that the company has pursued or like will pursue in the future?
Nikhil, would you like to answer?
Sorry, can you repeat the question, please?
My question was, like, are there any partnerships, acquisitions that the company has pursued or are planning to pursue in the future plans?
So currently what we are looking at is only setting up our south base and utilizing the hugely unutilized plant that we have at Kalam, Himachal. So I think if we are able to move it up to 80 to 90% capacity utilization, we're looking at 3x growth from where we are today. And we are also making it more dynamic in terms of more flexible to do personal care products from same facility where we are doing oral care currently. So we're bringing about the technological change that is required with a small capex, which will make the facility a lot more flexible to do multiple products at same facility. So this is our immediate next 3-year goal, and 5-year goal is, of course, having a south-based facility to facilitate our customers as well as grow.
Okay, sir. Thank you, and all the best for the future.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Irshan from IK Capital. Please go ahead.
Yeah, thank you. I just had one question. I mean, with respect to this, product innovation, are we also looking into electronic toothbrush? Like, any plans to get into it?
No, because electronic toothbrush is only 0.1% of the 15,000 crore market. In India, still there's a huge unutilized or I would say untapped consumer base to the extent of 30%, 35%, which doesn't use a toothbrush still. So I think first challenge is to get everybody to use a toothbrush. And then once we reach there, then probably the market will grow for the electric toothbrushes. Right now, the market doesn't justify that.
Okay, thank you. And you said like we are operating at 20 to 25% capacity, right? So what are we doing to, onboard new clients or? Hello?
Yeah, so what we are basically doing is, as I mentioned currently, the first focus is to cross-sell amongst the customer base of Vedic and JHS the products that we have capabilities for. So by this itself, we should be able to double our numbers, as I mentioned earlier. This is the first step that we have initiated. The step would be making the facility more flexible to do personal care and oral care from the same one. So that tomorrow, if we are able to tap into a new client, like there's a huge, large FMCG company that we are in intense talks with, if that fructifies, maybe we would convert half of our oral care into personal care and start producing for them.
So what kind of capex will that entail?
It doesn't require much capex because we have all the equipment. It just requires certain transformative changes in the manufacturing process, which would make it capable, because the equipment is more or less the same. The only thing that you need to change is packaging. So for like toothpaste, you need tube filling. For personal care, sometimes you need bottles, sometimes you need jars. So that's the only change that will be required. The rest all remains the same. We just need to bifurcate the production line so that there's no product mixing. So that's more of a transformative change rather than a equipment or a capex requirement. It's marginal.
Okay. Thank you. Okay.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Dhiral Jain, who's an individual investor. Please go ahead.
Hi, sir. Good afternoon. Thank you for this opportunity. So I wanted to ask, so are there any indicators that the management or the company uses to measure success or, track which goals have been fulfilled by the company? So are there any indicators that you use?
So basically, we have an annual plan which is made out every year, and we have a 5-year plan which is made out. Like we are going to be post Diwali is when we normally have an offsite every year where we formalize these plans. And basis those plans, then we start monitoring and looking at how we are faring on a month-to-month basis through a management review meeting.
Okay, sir. So I wanted to ask, do you have any merger and acquisition plans for the coming year?
Not for the coming year. This is the only merger that's scheduled with Vedic.
Okay. Thank you. Also, I had one more question. How do you align your business? How do you align your business with the current market trends that are shaping the future of oral care and oral hygiene per se right now?
Sorry, how do you foresee?
How do you plan to align your business with the current market trends in the oral care or oral hygiene market in general?
So basically, we are anyways one of the largest facilities and the only facility in the country which does both toothbrushes and toothpaste from the same facility. The biggest advantage that we bring on table for our customer is that generally you would see in the market promotions are run where toothbrushes are given free with the toothpaste. So manufacturing both from the same location gives a minimum of 10 to 12% of cost advantages because you don't need to maintain any inventory, produce toothbrushes at one location, ship it to second location, pack it, unpack it, and refill it. So all these are almost 10 to 12% of the product cost. So we bring on table those benefits, and these are the strategies with which we go to the customer.
Okay, thank you so much. All the very best, and have a very happy Diwali to you.
Thank you, and Shubh Deepavali to everyone also. Before I forget, more questions are welcome.
As there are no further questions from the participants, I now hand the conference over to Mr. Nikhil Nanda for the closing comments.
So I would like to thank the entire team of JHS and Vedic for the hard work, dedication that they all are putting in to drive the company forward, despite various market conditions that most of the businesses are facing, but specifically to our industry in particular. I appreciate all of you for participating in our conference call today, all the participants. Thank you very much for coming in and asking the relevant questions. You can get in touch with Adfactors, our investor relation team, for any further queries that you may have. And we look forward to interacting with you soon after our Q3 results. Thank you.
Thank you. On behalf of JHS Svendgaard Laboratories Limited, That concludes this conference. Thank you for joining us, and you may now disconnect your lines.